everyone. Welcome to the Stock Market Morning Prep video for Monday, August 25th. Hope everybody enjoyed their weekend. Beautiful here out on the East Coast. Not too hot. Really nice. Anyway, on Friday, we did get a little bit of a mixed bag. Dow Jones was down about 38. NASDAQ up 6.5. S&P down almost 4. And the Russell really flat, up 31 cents. We continue to have divergence in Russell 2000. That's been ongoing really pretty much most of the year. And then it usually plays catch up. But we'll also have divergence in some of the indicators. Now, we are in the doldrums of the summer. This is the last week of the summer. We have our ES profit target of 2,000. We have the 1272 extension at 2006. I am recording this very early Monday morning, and we are up 7.5 handles in the ES. That last print was 1995.25. Another 7.5 handles. Does that get me excited? Actually, it gets me more excited to start looking for shorts and start looking to short the market above these extensions. Now, obviously, we need a trigger. I'm not going to short the market just because we want to see the market's price start to roll over, and especially when you have a light volume market, because of the fact is that we are the last week of the summer is going to be even worse, and I would suspect really not much happening this week. Although that since we've moved basically 8 out of 10 trading days, now I think it's going to be 11 out of 12, somewhere around that area. I really didn't do a full calculation, but it's just about vertical. And when I see the indicators that I follow, some of them have made extreme moves now, extreme bullish territory, and some of them have not and are lagging, which gives us, again, divergence. And having divergence, we've had pretty much most of the year in all of 2012 and 13, and of course 2014 current. And the markets have ignored it. Markets have ignored the conflicts going on in the Middle East and Eastern Europe. So does that mean that we just keep chugging away? Well, we will do so, but with limited exposure. And another concern of mine is lack of trading setups. I don't see great trading setups coming my way. What I mean is, during the course of the trading day, you look for good quality setups, and it's just not happening right now. Partly due to the fact that, again, it's the summer month and the end of the summer, no less. So I'm really excited about getting back to work next week, and I do think probably coming off of Labor Day weekend, you'll probably have 1 or 2 days of quietness, and then I would suspect the end of next week we really start humming again, which I'm really excited about. Now, we were looking for a pretty decent sell-off. We did get the sell-off we just came off of a few weeks back, but I was looking for more. I was looking for a bounce and looking for a continuation sell-off, maybe correct somewhere around 8 or 10%. Obviously, that did not happen. It hasn't happened in quite some time, well over 3 years. Well, am I still looking for one? I am, and I think that we didn't get it in August. We should get it in September. I would imagine so. I just don't see the markets continuing to run higher, and buyers of dips continue to buy the dip without getting burnt. And what I mean by that is not that I could care less. I'll trade the market the way it is. But when you have everything so one-sided, the markets are made to fool the masses, and they can't just continue to make it that easy for buyers of dips to come in and buy the market. Now, what I mean is I mean the indexes. A lot of stocks aren't moving. New York Stock Exchange 52-week highs, they're actually making lower lows. They made a low print from the previous highs. They're not going anywhere. Stocks above the 50-day moving average on the NASDAQ and the S&P, which I'll show you, haven't even recovered. NASDAQ better because NASDAQ held up during the previous sell-off than the other 4 indices that we follow. Okay, so that's interesting. But again, it's just another weary sign that something may be brewing in the underneath the hood, so to speak. So let's go right into the indicators. So we have the McClellan oscillator. We didn't get the outside print that I like, something like this in here, but we did get up to these little extreme levels, and we came back in again. Now, if the market holds up between now and the opening, we should get that big pop up, and then maybe we get a follow through today, and then maybe Tuesday, and then start to roll again. But this here is starting to get interesting to the downside. Okay, we call the market bounce here, and now this is starting to get a little interesting to the downside on in the McClellan oscillator. Excuse me. Okay, so we have breadth is okay. looking good. But again, we're looking for this break. If you remember, before this market sold, we were looking for a break higher to challenge these highs. We didn't get it. Now we came back down again. So maybe with the market, popping today, maybe we might get a break up and we start more at these levels. But again, then you get into these extreme levels here, so you got to be careful with that. But what's concerning, stocks above the 50-day moving average. We're making new highs again, and where are the stocks? The stocks aren't moving. That's something that's really interesting. That it just, the indexes are being bid up, not stocks. Now the Nasdaq, obviously, actually held up much better. At least they were near the highs, because the index did much better than the other index did. All right, bullish percent SPX, which I don't have. It turned, but it gave a signal, but lagging the move, and that's a big concern of mine. So I just wanted you to put it out there when I see some red flags. And obviously, yes, red flags. They haven't been doing much. They haven't been telling us anything other than the fact that the markets have ignored every market divergence just about. But we did manage to look at the ES, and we managed to excuse me, call this out right around here in this area here. This was the beginning to the middle of August. It said inverted head and shoulders, measures 2,000, and we are right now, as you can see here in the upper right hand corner, 7.25 points higher, 1995. So we're 5 points away from our target, and then our extension is 2006. And right up in here, I'm going to look to see. Obviously, we'll wait till price, but it would start to really entice me to start looking for short in this index. Diamonds, all right. Well, what can you say? Diamonds did manage to recover, but again, challenging now. The previous high, it is making right now. It's a lower high than its high, but let's see if it can muster up a bigger move and maybe just get to the underside of this trend line here. Okay, and then we have the transports. Now the transports here basically have gone sideways last week, so we really haven't gone anywhere but moving higher, which is not a bad thing. It's actually bullish, right? When you have low volume and a sideways consolidation coming off this big move, is actually bullish for another pop higher. So 1272 extension would be the highs. Obviously, the highs here would be another spot to at least challenge the highs, if not make new highs in this index today. Okay, if the markets continue to hold up. And we have the IWMs, and again, here's another market divergence that we have in these sectors that the Russell is underperforming. This is something that you have to pay attention to. The market, the Russell was sold off, brought the markets down. Now we have to see if it's just making a lower high from this previous high and then starting to break lower. This is a big concern. This is something that we have to continue to watch more than any other index. Indicator. This is what you want to watch to pay attention to during the course of the trading day. And then lastly is the Qs. And the Qs here did well at the 1272 extension, blew right through it, and now the next would be the 1618, okay? And yet making new highs every day as we speak. And this index has been up. I think this index was up 11 out of 12 days, or up I think almost every day, if not. So kind of crazy. I mean, it's not something that you would expect the markets to do on a regular basis. I mean, this is just if you go all the way back. I mean, coming off of the April, May. This index also has been up pretty much, for the last 5 months in a straight line. So, is it great? Yeah, no, it's great. But what happens is when it does correct, it gets nasty. And we have not had a good earnings season. Earnings season has been iffy at best. Janet Yellen was speaking. Draghi spoke on Friday. That's the only thing that I'm worried about. Do they start selling the news that nothing happened, nothing materialized? They didn't say anything to talk down the markets, or at least to bother the markets, which I think that's what they should do. But now that nothing happened, do they sell the news? And that's another big concern of mine that I have. So I want everybody to be caution here. Use a lot of caution going into next week. This week here, I don't suspect much happening. When you have a dull market with no volume, the market tends to favor the upside. So let's just keep it from there. But again, take it day by day, because we have some some extreme divergence now, especially in the small caps. Lack of liquidity, lack of quality setups, all pointing for me for a possible resumption of the downtrend. All right, so let's see what happens. But right now, obviously, we're in a short-term uptrend. We've been up, and let's just stick to the trend and try to take the best setups we can. I wouldn't be so active this week, guys. It's been, like I said, it's been very, very quiet, and this week I would suspect it would be even more quiet going into this week. But again, there are some setups that if you can take one or two or three good trades, you've made money for the week. All right. Hope it helps. We'll speak to you tomorrow. Have a great day.